The stock market is on fire. The Dow didn't quite make it yet, but the NASDAQ and S&P 500 have hit all-time highs again. Today, we're going to talk about what's fueling this, which of the Mag 7 stocks are leading, and which ones are falling behind, as well as some predictions around a stock that may be having an upcoming stock split. So, I'm Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, and check out my referral links. Now let's get into today's update. The S&P and the NASDAQ have come back strong after the chaos of Trump's Liberation Day tariffs back in April. Those tariffs shook the markets, wiping out nearly 6 trillion in value in just 4 days. That was the largest loss the S&P had since the 1950s. But President Trump has gone on to get some trade deals and peace agreements in place, as well as calming the global trade war issues. Investors are breathing a sigh of relief and the market is coming back. Strong earnings, as well as the continued momentum of the AI and tech sector, have also helped this situation. So I'm filming this on the weekend, and the S&P closed at $6,173.07, but they reached an all-time high of 6,187.68. And the NASDAQ is just about the same situation, slightly down from its high. Today is a stock market video, but just to quickly touch on Bitcoin, it's currently 107,000 after dipping way down into the 70s back in April. So it has also rebounded to those pre-liberation day levels. Now let's take a look at those Mag 7 stocks, the backbone of the stock market, making up nearly 1/3 of the S&P 500 due to the large market cap of these companies. But they're all not shining equally. Let's start off with Apple. Year to date, down 19.70%. So when it comes to Apple, their WWDC for 2025 did not really excite investors. They've had weak iPhone demand, especially in China. These tariffs and the trade tensions raise concerns about the supply chain and the cost of producing their products. There's just been a lot lately that has hurt the brand momentum. So let's take a look at Tesla. Year to date, down 19.82%. Its poor performance is due to the tariffs, the initiative cuts, the issues going on did not help anything, as well as their net income dropping in Q1 of 2025 and the robo-taxi delays, missing targets, and not having the consumer's confidence when it comes to that rollout. And now onto Google. They're down 5.69% on the year. And some issues that they are facing is the antitrust lawsuits related to AI content use, concerns related to the heavy AI investments that they have been making, and even with that, there is a perception that they are still lagging behind when it comes to AI to those rivals like OpenAI and Microsoft. But even with those struggles, analysts are still giving it a good, strong price target, suggesting a significant upside from their current levels. And they're still having strong ad revenue and making strides to keep up when it comes to the AI initiative. So I do hold all of these individual companies in my portfolio, as well as those ETFs like VOO and VTI that are heavily weighted in them. So I'm going to give an update on my percentage gain when it comes to my investments. We all have a different starting point when it comes to investing. And currently I am up on all of these positions. I'm going to share all of those after we look at the rest of the Mag 7 that are doing better than these first three. So year to date, NVDA is up 17.47%. Over the last week alone, up 10.70%. Its stock price had a huge jump this week, and with their market cap going up to $3.5 trillion, it's back to being the world's most valuable company. You can see there were some rough times going on, especially around April. But when it comes to AI, the demand is unstoppable, and NVIDIA is leading the way. Now, let's take a look at Amazon. not up significantly on the year, but analysts predicting an upside for them with price targets of about $250. So they've been putting focus in their AWS growth. AI spending. They've benefited from ads related to Amazon Prime as well as the NFL. They've been incorporating robotics to make faster, cheaper order fulfillment. They're getting involved with new ventures related to healthcare and even autonomous vehicles. And they've had strong profits along with a massive cash reserve. And they ended the week up 6.47%. Microsoft, and they are up 17.66% year to date. They've been having steady growth when it comes to AI as well as cloud computing. Throughout 2025, there has been an adoption of using Copilot across Microsoft. They have their hand in gaming, as well as having strong earnings. And analysts have also raised their price targets as high as $605. And now our last stock that we're going to take a look at is Meta, up 25.30% on the year, up 7.30% over the last week. This global tech company, known for Facebook and Instagram, WhatsApp, Threads, generates a majority of its revenue from advertising, but they're doing so much more, getting on board with AI, with smart glasses and other AI tools that will drive performance and user engagement within these apps. So it's a company that has a strong investor confidence, as well as analysts who have given it price targets as high as $811. And when it comes to Meta, I saw a few headlines with predictions of a stock split coming in 2025. This could be a strong candidate. The only MAG 7 stock to never split its shares may do so in 2025. So these are just predictions, and stock splits don't change the company's fundamentals, but they will make the stock more affordable for retail investors who might gravitate to that. All of the other 6 companies in the MAG 7 have already done this in the past, some more than once, but this one is the standout, Meta. So we will see if 2025 is the year that this finally happens. So as we just took a look at, the stock price currently $733 with analysts giving it targets in the 800. So if this stock split occurs historically, this could spark a 20 to 30% growth in the year after. A couple of concerns when it comes to Meta is their heavy AI spending and the fact that they are heavily reliant upon ads, which could be impacted with the swings when it comes to the economy. So it is one that I have in my portfolio, one of my smaller positions. Leave me some comments. Let me know. Do you think that the Meta stock split is coming this year? So now I'm going to quickly share my results, starting with those ones that were down on the year. Apple, I'm currently up 30.41%. One of my first investments when I started investing outside of my 401k. So I've been in this one for several years now. Tesla, still up 49.01%. Just earlier this year, I was up over 100%, but still holding for the long term. Google, I'm up 36.30%. Amazon up 60.04%. NVDA in my growth portfolio, I have that one in multiple. I'm up 52.58%. I'm up 44.67%. And Microsoft, I am up 13.97%. Now, Microsoft and Meta are my smallest positions. I'm currently doing a challenge where I am investing $10 daily into Microsoft. So I'm working on building that one up. But thinking about the future of Meta, that might be one that I try to put some attention to also before the potential stock split that may be coming occurs. So we all have a different starting point when it comes to investing. We hit all-time highs on Friday, June 27th of 2025, and we will hit them again in the future. So I just focus on investing and having my time in the market, letting my positions build and grow, being mindful about what I invest into. So I hope you enjoyed this update. Like, subscribe, hit that notification bell, set it to all, support the channel. Don't forget to leave me some comments, even if it's just a yellow heart to let me know that you were here. Do you think Meta will be having a stock split? Are there other companies that you're looking more forward to a stock split than Meta? Are you glad that you invested through those red days, or are you just getting started? Let me know. Thanks for watching. Okay, bye.